Hey, what's going on, everybody? It is July 30th. It's Sunday. And first off, I'd like to say thank you to everyone that joined myself, Allison, and John Carter in the small account class that we did yesterday. And after the class, I did, as I believe everyone does with every basically performance they do, they take a step back and be like, all right, what could I have done better? And then for me, due to time constraints, I couldn't really go through step by step on how I prepare over the weekend. Like I talked about it and talked about what I do and showed you how to do it, but I never actually really did it live and walked you through it. So, well, it is Sunday. I have not prepped for the upcoming week. So I thought, well, why not just record what I'm going to do and get ready for heading into next week? So this is where I want to do my market analysis, and then we'll go down to my sector analysis, then we'll go looking for setups. And then just like I talked about in the class, it's all about preparation. So this is where we're getting our watch list. We're lining up where we want to hunt, we're going to get our targets, and after that, we just wait for our entry and then we manage our position at our exit points. That is it. A lot of it's being patient, being disciplined, and the rest just follows, or I guess I would say follows, but works itself out. And but yeah, other than that, let's go ahead and get started. And this is all going to be based on that 50, 30, 20 rule I talked about. All right, so let's go ahead and start. All right, so first off, I have the Excel spreadsheet that I gave all of y'all in the class. And we're going to go ahead and make a clean slate. I leave the numbers up here just because I know I just go and adjust it as they unfold. And then I do have my little notes here that I will write up as well. So over the weekend, what I typically do first is like is there any super crazy economic data coming out? Um, So the main thing right now that is all inside the news is anything pertaining to inflation or FOMC. So, like, believe it or not, years ago when I first started trading with inflation and the FOMC like statements and stuff, I paid no attention to them because they almost didn't move the market anywhere for the most part, and so I didn't have to pay attention. But now, right in this current market, with inflation being an issue, we have to always kind of take note, or at least take note of when they are going to be talking and statements and things like that. FOMC minutes, you don't have to worry about that because they're typically just a replay cliff notes of the previous report they just did. But I like to at least know what is happening in the week in front of me so I could kind of adjust and plan my trades accordingly around those timeframes. So we'll get that going. All right, so Sunday, obviously nothing. Monday, and if you're unaware what this is or how to access this, it's all for free. This is available on forexfactory.com, and then it just brings this up immediately. So let's see here. Nothing on Monday. Wow, absolutely nothing. Okay. And then heading on to Tuesday, jolts, I assume. Okay, cool. Nothing too crazy. If we're in terms of swing trading, if I was doing a day trade, I'd acknowledge it, but swing trading, not a big deal. Some overseas stuff, it may move the market some, but we'll see if the trend stays true, and that's into Friday. Okay, so nothing in terms of swing trading. Nothing in terms of swing trading is going to determine my trades really. All I know that we might have to watch for, but kind of plan for, at least be diversified in your portfolio, is Amazon and Google earnings. Oh, sorry, Amazon and Apple earnings, and that may shake things around a little bit, but that's really all that's it. But if you're hedged appropriately, then you kind of potentially catch the overall move, and then just let the rest of the trades play out. All right, so starting clean slate. I'm gonna go ahead and move this all the way. Now, something I was thinking about it is like, okay, I didn't actually show you these moving averages. So first off, whatever platform you are using, you you don't need all this stuff. This is just other stuff that I use for other types of trading methods, and that is just not important for the class and the strategy that I taught. So like all this right here is not important. This is from the other up here. All this stuff up here is from the other charts that I've showed you. You could put them on this chart as well if you wish, but ultimately you don't have to. Basically, they're just kind of there. I've had them there for a while and kind of just left them there. But because I really don't use them on this chart. But all I have here, and what you are going to need to really know that is here, is this right here, is the moving averages, right? This is how we did our sector analysis. We need the 200 simple moving average, the 50 simple moving average, and the 20, right? So based off the class, we're going to use these moving averages and narrow down what sectors we believe is the strongest. So first off, we need our market thesis, right? So we need our market thesis. So we'll look at the SPY, the Qs, the diamonds, and the IWM, kind of like what are they doing right now. So let's get started on that part. All right, so the SPY. We're kind of like, in my opinion, at a very important part. Now, why? So I drew price lines from this level of resistance here, from these levels right here, and this little peak right here. And you may be wondering, well, okay, why are those peaks important? Well, they're important really because if you think about it, those are the peaks of the weekly head and shoulders that formed before the bear market flush. The market is going to respect those levels. Now, the question is, do we hit them and get rejected? Or do we hit them and consolidate for probably a long time? Because like the range underneath the resistance is the question. There's no reason to believe we won't uh, break out of it, but who knows how long we may chop underneath it and how long or how large the range is underneath that consolidation. There's no, at the moment, any real reason to believe we're going to hit it and then we're going to turn back down, right? We may turn down and consolidate for a really long time, but the question is how far is that range for consolidation? So with that being thought, I don't want to get overly too bullish because we're right into those resistance levels and it doesn't really look like there's some extravagant um, economic news and stuff like that that's going to blast us right through it. Could be dead wrong, but at the moment, it doesn't look like that. So those are some peaks worth noticing. So if we're at resistance and we can expect some consolidation, I want to ask y'all, what type of trading should we be doing? And hopefully, he said within the expected moves, there are some things we should have. It wouldn't hurt to have a little bit of bullish exposure, and we already have a hedge on in the small account mentorship. So that's kind of like how I'm looking at structuring the portfolio. All right, so like I said, we are pushing up into resistance. And when I was talking about the range, the question here is I don't expect us to blast all the way up to here, well, though we could, but there's no reason to think it will at the moment. Maybe I'm kind of thinking we kind of sit here and consolidate for a long time while we wait for the 50-day SMA to potentially catch up, and who knows how long that will be. Or we may even pull back down to that, and that'll be the range, right? I'm kind of expecting sideways action for the upcoming week. So sideways action into resistance. Let's go ahead and place them within the expected move trades. And if there's any bullish plays, we can go ahead and look at those as well. So that's the SPY. Now let's go ahead and mark it down as well. We're well above the 50 and 20, right? And they're sloping higher. So just like in the course, give it a 3. We are, like the trend is higher, so that's why we want to structure our portfolio bullish, but from basically a week to 2 week perspective, we're thinking a little bit more sideways before the upward trend continues. So that's the SPY. Let's look at the Qs. All right, I have a line drawn here from this peak and this peak, and I'm expecting kind of the same thing. The Qs potentially may consolidate up here for a little bit before potentially maybe the 50-day SMA comes up. However, it is going to and then push it back up. So once again, it is above the 20, above the 50. They're certainly sloping higher. And from here, it's really, I'm expecting a little bit more of consolidation. So, but it is a 3 as well, based off of the rules given. Now, diamonds up against this resistance level. This may pull back a little bit more, but we'll see. Just once again, just like another within the expected move type of week, which happens based off of the 3 price action concepts that we talked about. But we're above the 20, we're above the 50, and they're sloped higher. That's a 3. 3. I'm pretty sure our IWM is about the same. Okay, IWM up at resistance, but it is above the 20, above the 50, and they are certainly sloped higher. So 3. Overall market, so what does this mean? All index ETFs get a 3. So what does that mean? that basically means we just want to make sure our portfolio is structured in a bullish way. But since we're underneath resistance, we want to add a little bit of a theta type of element to it to take advantage of sideways action, but the trend is still obviously still higher. Okay, so from there, let's go ahead and do our sectors. All right, so just like all the sectors that I've given y'all in the class that I show you evaluate, we'll go through these really fast. So first up is XLI. All right, so above the 20, above the 50, and yeah, they're sloped higher, right? So that's a 3. All right, next is materials, SLB, above the 50. I'm sorry, above the 50, above the 20. And they're kind of sloped higher. Sure, I'll give it a 3 as well. It is coming up into this level of resistance, but we'll see if there's any setups there. Next is XLV. Okay, this one's a little bit different. We'll see here. So zoomed in, I'm expecting healthcare kind of trying to break out. And the reason why I'm expecting healthcare to break out is I'll pull up our other chart, is it built this squeeze, it blasted, it fired up. I think a pullback down to the daily 21 EMA. It may be the trigger to pushing it higher, but we'll have to see. That's kind of what I'm expecting here. But nonetheless, if we use a systematic approach, we are above the 20, right? So 1, above the 50, that's a 1. And at the moment, they are kind of like more sideways, so I'll give it a 0. So there we go. Healthcare, we'll give it a 2. But nonetheless, it still doesn't mean we can't go hunting for it there. So now that this one is a little bit different than just, okay, everything's getting a 3, XLV, just like that, boom, 2. Next is TECK. Okay, above the 20, above the 50, and sure, still sloped higher, so we'll give it back a 3, really, there. All right, XLY. All right, so this one's a little bit different. It's not completely just spiking up like everything else. All right, so XLY, consumer discretionary. What we do here, right above the 50, it's a 1. It's at the 20, so that's a 0. And then they sloped up. They're kind of sideways up. I think either one could work. We'll go with, to be honest, I'm going to give it a 0 because they're kind of a little bit more sloped sideways up. I just go 0. And so this gives XLY a 1. Okay, above the 20 on 1, above 50 on 1. They're sloping, yeah, much higher than the other one was, so we'll give it a 3. And remember, this doesn't have to be so black and white. It's really a gray area. It's more of horseshoes and hand grenades versus sniping something out. XLC, we just want to make sure we're looking at the right place. Above the 20, above the 50, certainly sloped higher, and so that would be a 3. And I do this every weekend. This keeps you on the right side of things. SMH, above the 50, or sorry, above the 50, above the 20, and obviously sloping higher, but we do need to be careful in SMH. Reason being is because AMD does have earnings, and that is going to move SMH, if you recall. Now, if you remember that the 50-30-20 rule, right? So the 30% was sector and industry group. If AMD has earnings and it moves, it's going to take all of the semis with it. So the question there is basically, do you have a directional bias on the semis? If you do, then you could trade it. But for me, the way I look at it, AMD is going to have earnings, which can be a mover in the semis. I'll just leave the semis alone. And so therefore, it just means I'm not going to place any trades there. That's all it means. It just helps you really narrow it down and finesse your way through the market. All right, so semis R3, looking good though. Next is XLRE, real estate. All right, a little something different here. Okay, so I was actually looking for this to break out and run, but it did break out. Maybe a little pullback. We'll see what happens on the pullback. But nonetheless, for using our systematic approach, we're below the 20, so that's a -1. Above the 50, so that's a +1. And then they are sideways, so that's a 0. So just like math says here, this gets a flat 0, which may not be too bad to look for sideways plays there. We could actually look there as well to see if there's any sideways plays in XLRE based off of if the sector is sideways. If the sector is sideways, then the ticker may go sideways. Then you want to take advantage of that, especially if you have a sideways thesis on the market. All right, so XLF is next. Oops. All right, above the 20, above the 50, certainly sloped higher, so we'll give it another one. Bam, 3. All right, that's an upgrade. It's been a 2 for a while. Next is Staples. I know Staples were looking pretty good last week. Still looking good now. Some things worth noting here is I really didn't cover this. It's more of the more knowledge you gain in trading, the more you learn. Like, so right here is the 50-20 crossover. So that's good. So basically we're above the 20, we're above the 50, and they're sloping. They did just cross. They're kind of sideways still. So I'm going to give it a 2. And then next is XLU. Above 20, well, it's kind of touched. I judge at the moving average by if it's kind of touching it. So it kind of ended there. So what I'm going to give it is a 0. It's above the 50, it's a 1, and they are certainly sideways 0. So I'll give it a 1, which is what it was last week. XLE. All right, finally got above that 200. I know oil's been looking great. I've been day trading futures on it, but I do think it's starting to look good from a swing trading perspective. So above the 20, above the 50 are certainly sloping up. So energy is being upgraded from a 1 up to a 3. And next one is XTL. I might actually just look at removing this ETF because I don't really trade AT&T and Verizon and Telecom or all that like I used to. But you can see the money is certainly flowing out of this one. You see how this one has an obvious weakness, but we could go looking for tickers in this if we want to add a bear. But it is below the 20, below the 50, and they're kind of sideways. So it's a -2. So this is certainly an area where uh, money is being taken out of, right? The rest of the market's going up, but this, look, you can just zoom out and just see how this is kind of going sideways to down. So so we got our market thesis, which is at the moment is overall prevailing trend is obviously higher, but it might need to catch its breath right here. So if we have an overall bullish trend or bullish thesis, but we think, over the next week or two, we may not make exaggerated moves. So the way to take advantage of that is within the expected move trades that we look for. So, or that within the expected move setup. So I'm going to go ahead and show you all this. So once you plug them all in here, right? It's all plugged in. What I do next is I click on this little arrow. I go to largest to smallest. Bam. So what does this do here? This tells me up here are I go from 2 and above is where I look for bullish plays. And then if I'm needing some sideways, which might be the case, we could look here for XLRE for some sideways plays. XTL, if we wanted a bearish play, I would look there, but I probably won't simply because the overall prevailing trend is higher. And for a short, I just have a short on the indexes. Okay, so now that we have that and we have a thesis of sideways action, let's go look for some within the expected move trades. So yeah, we'll look for some expected move trades and we'll look for some squeeze plays and maybe some continuation. I may leave continuation alone simply because if I'm not expecting the markets to make a really big move, then continuation plays may not play out. So we'll look for some bullish squeeze within the expected move and we'll see what happens after Apple and Amazon earnings. So let's go ahead and look for those. All right, so what I do from there, if we're going to look for within the expected move and potentially squeezes, first let's go ahead and look for squeezes. So that scanner that I provided y'all in the class is, okay, so we have the TTM squeeze. This one's scan for stocks all within just a regular TTM squeeze. All right, and if you recall, we have the sector one here, right? Actually, what I want to do here is I want to zoom in. I want to narrow this in a little bit. If you have the Squeeze Pro, then that's what you use. I'm going to use the Squeeze Pro, but if you just have the regular squeeze and that's something you want to use, by all means use it. But the Squeeze Pro gives you a better indication as to what potentially may be unfolding. So I'm going to go ahead and look for those Squeeze Pros. But if you just have the regular TTM squeeze, by all means that works as well. Looking for there we go. Bam. All right, I don't need it in the highs. These are not going to be any volume right now, so get rid of that. Bam, bam, bam. So this is everything just in a squeeze. Okay, and actually before doing that, I'm going to pull this up. So this is something you can create on your own. But what I have here, what this is the top 20 holdings of all the major ETFs and then a few little extra ones that are kind of like the honey badgers that keep on moving on their own. So I have the top 20 in all the major ETFs, and then I have them if they're in a weekly squeeze, daily squeeze, 4-hour squeeze, 2-hour, and hourly squeeze. And basically, if it is red, that is a if it's red, this is a mid compression squeeze, which is your regular TTM squeeze. If it is orange, that is a high compression squeeze. And if it's pink, that is a low compression squeeze, which is your black dot. And then right here, I just have it divided by sector. So like, how do I use this and why? Well, it's really simple, really. If I'm using it in terms of finding squeezes in sectors that I know I want to look at, I just filter them by sector and then look to see if there's a squeeze. And then I just look at the chart to see if it's something I want to play. So, all right. So like first up, if we pull this up here, like, all right, industrials was looking strong. We'll see if there's any industrial squeezes. Daily squeeze. Let me click this. We'll go to the top. Okay, let's go to the eyes. Look, boom, industrials, right? Scrolling down. So we can go from here and then down and see if there's any squeezes in the industrial side. All right, so there's a few. So we have two right here, Lockheed Martin and NOC, and then there's one in EMR that has earnings coming, and then UPS, super slow mover though, and then NSC. So we could look at those, see if there's a setup. So I'll move this out of the way here, pull up our chart. All right, first up was NOC. All right, remember, very simple, quick systematic approach. We look at, all right, squeeze, nothing is lining up here, right? In terms of the setups that we talked about. Go ahead and close it. All right, cool. Not work, no high probability setup. All right, LNH. Nope, no setup. EMR has earnings coming up, so no setup. We don't hold those trades through earnings. The next UPS, super slow mover, earnings coming up, and it's not within our entry zone. And last but not least is here. Just had earnings, barely printing as first dot squeeze. Boom, boom. Beta is a little bit too low for me. So might leave that one alone. All right, so no industrials, cool. So no industrial trades. Next, all you do is look right here. All right, cool, materials, XLB. And so what I'm gonna do here, then look for squeeze here. Could actually minimize this. Nope. Once again, it's not fitting our squeeze criteria. Looks like they all want to go short. VNC, maybe. Bet one. Okay. Let's take a look at this one. Oh, it has earnings coming. Nope. Leave it alone. NU looks like NU's earnings shook the tree a little bit. Okay, so no materials, no big deal. And then we're gonna go down to XHB. Out of XHB, all I really look for. Let's go down to real estate real fast. Earnings. The thing though is we're in the middle of earnings and everything is kind of needing to work itself out first. Okay, nope. Nope. See, I'm just going through these sectors really fast that are in a squeeze. You see how they all look very similar, right? This one's just a clean short. This thing is just going down. You know, all the big candles are coming down, so I'm going to leave real estate alone. You notice how they all look the same? They all have ginormous bearish candles, so we'll leave it alone. We don't have to put a whole lot of money to work in it, so let's leave it alone. Okay, XLA. All right, next, or sorry, is let's go to XLK. And to be honest, oh, I skipped XLK. I was like, why did I skip that? But oh, yeah, I skipped it. All right, let's go to TECK. Everyone loves trading TECK. Let's see if the TECK is still the right way to go. So Thinkorswim puts TECK as an information technology. So just so you're aware, there is what's happening. Go ACN. All right, this one don't look too bad. Let's see here. Okay, so let's look at it from a systematic approach. All right, plus. All right, this is 0.6. That's something we have to be acknowledged. But so the thing about this rule, it's not exactly hard and fast, but it also does mean it probably won't move a whole lot. So probably will just leave that. If you're doing a spread, that's not that big of a deal. But if you're doing long calls or puts, that's really where that's going to matter the most. But we'll continue on. We'll leave that one alone. ADS, okay. Going into earnings. Oracle going into a bearish squeeze. Okay, we'll leave that one alone. Now. Okay, maybe. All right, cool. Now, so let's talk about now. And I'm going to mark this one down. So our bonus, our betas hit. Great. This is stacked negative, which for me, I look at it, but it's a bonus if they're stacked positive, but if it's negative, it's okay because as price oscillates and consolidates into a squeeze, that's typically whenever you'll get, it's not as important because it's consolidating, right? They're going to be moving back and forth. So I'm okay with looking at this one from a bullish standpoint. It's at 34 EMA, it's at the entry zone. Zoom out some. It is rallying. Maybe we get one more push up into resistance here. So I'm okay with looking at this one. And so like right here, what's the setup? What's the play we're making here? So earnings cause volatility. Sometimes volatility shakes up our indicators. So earnings came out, we gapped up, sold off right down to the 34 EMA. If you remember the class, this is a good example. If you remember the class that I talked about the 34 EMA, this is a good example of it. Notice what happened while we're there, and I'm not exactly going to talk about it simply because it's going to be put on YouTube, but if you took the class, go ahead and look back through the notes and look what is happening at the 34 EMA right here on this one, even with all the big volatility that it unfolded in it. So this one, we're in a squeeze. All right, our bonus, our beta, stacked EMAs. Okay, not too bad. This one I already explained. All right, cool. Squeeze. So what do we do with this one? Bullish squeeze column. Now. Cool. Next. Oh, sorry, not Cisco, but Apple has earnings coming up, so we'll leave that alone. AMAT. When do they have earnings? Because I know, like I said, AMD does. Okay, so we're going to leave the semis alone. That's all those. Going down to Broadcom, TXN probably will. Yeah, leaving that one alone. All right, semis. All right, cool. So there's that. So far, only one squeeze so far. All right. All right, next sector. And that's just going off of that. We could also, with the scanner I gave you, you also could do this. So if you're looking for tech, this is everything in a squeeze. There are 130, so I actually just go 200. Break it down by sector. It's like WDAY. I know WDAY has been looking good. It's in a bullish squeeze. Okay, so look, this is what I'd like to see here. This is no doubt where things are going. Bam, 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 right? Squeeze. But look, we're up here. We need our dip down to here. So that doesn't mean we ignore it. We put it on our watch list and we wait for our entry. Does have earnings happening here, but hopefully the dip happens before the end of the month. Okay. So that was that. Let's see, ZS. Bullish squeeze outside. We say boom, 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 boom. All right, cool. ZS is back on the list. All right, going through these real fast. Apple has earnings still. STX. Let's see. All right, it's reversing off our earnings. Okay, EMA is still saying negative. So that's the thing here. You may see the squeeze looking like it wants to go bullish. Oh my gosh, it's rallying high. But look, if you look at the top, the high probability trade is not right now. So, all right, off to the next one. Okay, umbrella. Haven't traded that in a while. Squeeze going negative. Nope, nope, nope. Doesn't fit our criteria. We're done. Okay, next. FSLR. Had earnings, spiked up, came down. Bam, bam, bam. Not too bad. Okay, I could wait to see how this stabilizes. Okay, so that's all tech. Communication services. Oh, Roblox. Sorry, because there'll be an XLC. All right, let's take a look there real fast. Nope. Okay, so there's a few bullish squeezes, right, that we found in that sector. Now, if we look at the other sectors, so we talked about tech, XLC, which is communications like Netflix, Meta, things like that. And we can run through these real fast. What I'm going to do here is I'll leave the watch list or the scanner up real quick for you there, and I'm just going to hand jam them real fast and go through them step by step. All right, this one, just look across the top. It does not fit our criteria, right? All right, cool. Next. Dish. We have earnings coming out. That's right around the corner. So that's the thing, though, with earnings, we have to be a little bit more particular. That's unfortunate. It certainly looks like it wants to turn higher, but there's earnings coming. Look at the top. All right, no high probability trade. Earnings. All right, cool. Next. Not sure what happened there, but the market did not like it. Okay, so SE. No, it looks great. If we look across the top, boom, there's actually one thing that says the high probability trade isn't there. So we just leave that one alone. It is in a squeeze, but you see that yellow? Tells us no high probability trade. We'll leave it alone. Like it may go higher, but we're not looking for things that may happen. We want high probability trades. All right, so from there, talk that. We're not going to do that. Was there anything in financials? Citigroup, AFRM. I know AFRM's been talked about a lot. MA. Okay. See some of the credit cards. See. See, looking at the top, right? Always remember, put in the ticker, look at the top. Does it fit our criteria? No, it does not. Next. It's in a squeeze. Boom, 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 boom. Earnings already occurred. It's at the entry zone. I could get behind this. So we go from the market's larger, trend is higher. XLF, which is the financials, is looking bullish. Like we gave it a 3. And from there, we're looking for bullish squeezes. And then from there, we look at the setup. So the setup here, we look, okay, bam, 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 bam. Cool. Now let's go ahead and throw that on the bullish squeeze watch list. Okay. Okay, so we talked about that. NU, I don't know if AFRM is even, I know it's been all the rage lately, but I don't know. Let's see, it's in a squeeze. Earnings is coming up, end of the month. We go bam, 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 bam. Forgive my bams. And then squeeze. Okay, cool. So we add this one. I mean, looks great, right? There's our bullish trade. All right. And then where my financials go? FI. We'll check the last financial there. Entering a squeeze. Nope, nope, nope. Okay. Nope. Not doing that one. Okay. So then I feel like we're getting plenty of squeezes going on here. Okay. So we talked about where we looked in financials. Now let's look at energy and look in the other ones real fast. Energy names. CBX. EQT. Let's see here. I'm the wrong chart. All right, looking at this, that's not a high probability moment in time, though I do like it for upside, but that's a whole other setup. So XLB, now we'll see XOM, nope. Now we'll see EQT is what was on there. Okay, boom, 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 okay. The beta is only 0.6, we'll leave that one alone. XOM was on there. Did I look at that? Oh, I did. Okay. BTU. Well, I thought we could get a little dip before earnings would be decent, but there's one little thing not looking too great there. All right, so I guess energy from a swing trading perspective, it's not really set up. Let's take the materials, DOW, Alcoa. Okay, this one's looking decent for a pullback. I know, so it's in a squeeze. I know the stacked EMAs is not a thing, but let's just see how unstacked they are. Okay, that's why they're not quite, well, that's why it's not showing stacked EMAs. So if you're curious what stacked EMAs is showing, this is what it's showing right here in terms of what the label is doing. So we have the 8, the 21, right here is the 89, 34, 55. So for them to be stacked, the 89 would have to be down here below it. But that's not going to happen for a while. But it's certainly worth noting. I'm going to watch this one. It's in a squeeze. That was looking good. This 189 EMA, is not going to be exactly a deal killer for me. And I know this is something that's a little bit more finessing, but I'm okay with that. But I'm not taking entry as of yet. It's all the way up here at the second ATR, right? That's not what we want. We want to catch a dip to play the squeeze. But I am going to wait for that dip, and I'm not going to let that one little part shake me from getting into it. But that is me. If it doesn't make sense to you, by all means, you don't have to do it. But that was DOW. Oh, that one's already firing. Okay. So we have plenty of squeeze or of bullish plays that we could potentially play, right? Where we're looking for a squeeze to play out. Okay, here we go. This one's not looking bad. All right, so I found this one right here on our squeeze scanner, and then it is right here, right? Then we now would just pull it up our thing, or our chart, sorry, and then we look at, okay, does it hit our criteria? Now we just need a little bit of a dip. So I'm gonna go ahead and throw that down as well. To be honest, I did not expect to find this many bullish squeezes, but hey. And this is in the materials, see CLF in UE. Okay, boom, boom, boom. Earnings already occurred, it's in a squeeze. Yep, I'll write that one down too. And then I actually need to put this. That's for whenever it gets too big. All right, there was one more I was gonna look at that was on here. Oh, CLF. All right, so this one's EMA is a nice stack positive. All right, cool. All right, so from there, I think we have plenty of bullish trades. You got to remember, um, so as of right now, like we are having a, oh, sorry, let me take a step back there. Our overall trend is obviously bullish, right? So we want to have bullish trades. Now, but we're also preparing for consolidation. Prevailing trend is higher, but we also think we're going to go sideways to like consolidate, right? So now we need to find some sideways plays. We have plenty of bullish squeezes that we need to wait for entry for the most part. We also don't have to rush into every single trade on Monday. Like let's let the market figure itself out on Monday and then look to put some capital to work. Now from here, so we have plenty of bullish trades in outperforming sectors. Great, so that is what we want. Now, when it comes to within the expected move, I don't actually have a scanner for this because typically when the market is going to consolidate, then most of the major cap tickers are going to consolidate as well, and you just run through them and you'll see the setup. But let's go ahead and see if we find any within the expected move trades we can take advantage of. All right, so like any of the major tickers I was talking about would be like, okay, Meta. All right, so that one does not fit our criteria. NFLX, or sorry, Netflix. Nope, doesn't fit our criteria. Saying we just start looking through any major big one. Definitely not. Apple has earnings. Definitely does not meet the criteria. Don't want to trade any semis. Let's see. Nope. Oh, 1 second. We could do this. Okay, boom, found one right here. We'll probably take advantage of. So if you remember our criteria for the within the expected move play, right there. All right, let's go over here. Cool. Let's see if there's any more. Okay. I bet they're all going to look the same. None, not Goldman. And I'll put both of these down right here as far as which to play, simply because of one may give you better credit than the other. Okay, so we got those ones. What's some other ones here? Let's go ahead and look a little bit more diversified here. So we have some financials that have it. Tech is going to be a little bit of a tricky one with Apple earnings. CRM. See, we're a little bit, a few days late, but that still may be okay. We'll have to wait at moment of entry. But you see how that fits our criteria. Let's see, when is earnings? That's in. You're gonna pop up for me. 23 days. Okay, so that fits our criteria there, but we'll wait and see um, if this is when we're actually going to hop in. Okay, so that's some tech. And what I'm doing is, now that I'm doing this, I'm actually, what's kind of funny is I'm figuring this out right now. On that graph right there, where they're gray, kind of looks like it's done firing. If that's the case, then I guess I just figured out a way to look for within expected move trades. Literally figuring that out right now. Okay, let's see another one. Okay, ATVI, is that, did they get bought out? What's going on here? I don't know. Nonetheless, it fits our criteria. It's already had earnings up here. Certainly extended. Looks like they had some type of news. I'll look more into it, but I will put it over here. So that's two financials, two tech. I believe EA looked about the same. That one's heading into earnings. That will probably move ATVI. So I probably won't do within the expected move on there. See, Take-Two Interactive. That's how you know you've been trading for a while. If you could just see if you see the ticker, you know the immediate business. It's kind of funny. Snap. Haven't seen that in a while. Yeah, not touching that. Okay, going. Real estate. We just said real estate was looking a little. That is just going. Don't know what they did, but they made someone mad. No, that just had earnings. Going into earnings. Same with these other ones up here. Wells Fargo. That also, it looks like the banks may consolidate a little bit. CWFC. And I want to pull up XLF real fast. Okay, that makes sense. XLF right here, XLF is also starting to slow down here, so that might be where we put on some within expected move trades. One of them at least. Definitely not hopping on all of them because you don't want to expose yourself too much into one sector. That's what I was talking about when it comes to diversifying. UNH does not fit that criteria. Going into earnings. Far lower. I'm looking. Home Depot. Home Depot's and Lowe's has just been rallying forever. Nope, still nothing yet there. They're just very strong. eBay. Starbucks. Going in earnings. FedEx. Not quite there yet. ADP, Caterpillar, going into earnings. This one might. I know it's kind of like back and forth right here through the volatility, but GE might be a good candidate for within the expected move trade. So I'm actually going to write that down. No, DD, DuPont. Maybe. Tough to say. It was strong, and then something came my straight down. Probably leave that one alone. All right. Well, to be honest, I think we have a decent little group here. So now let's look at this here real fast. So we have bullish squeezes, right? Where if in the event they do wish to fire long, I really do like TECK. Dow looks decent. AFRM looks pretty good too. Really like WDAY, but some of these need a little bit of a pullback. I do like these ones. Look to play those. And I'm going to leave continuation long alone right here if we're going to consolidate, so I'm not going to focus on those this week. And within the expected move, in those particular sectors, like I should also mention as well. Remember, EA has earnings, which may move ATVI because in the same sector and industry group. Now, it does look like financials wants to consolidate a little bit, so I'll probably throw on one or two within expected moves trades there and maybe some of the squeezes, but I'm not looking to exactly rush right in on the Monday and see how things unfold from there. But that's pretty much it. I do that every weekend, and then I watch those on my watch list. I believe most of y'all are part of the small account mentorship now, and you'll see how I put those into action. I'm always there to answer your questions as well. But that is all I have for y'all in terms of what I do for my weekend homework every weekend, being prepared to go into the following week, ready to put capital to work on market structure and thesis, and then you narrow it down to sector and industry group, and then from there you narrow it down to your setups, getting long the strongest stocks and the strongest sectors and industry groups. And then obviously it'd be vice versa if you're looking to go short and if the market's looking to consolidate, you want to find tickers that are kind of sideways where you're looking for prices to consolidate as well. But I hope this was very helpful to you. This is one thing I realized that could have been done a little bit better in the class. So hopefully this video helps you. And if you have any questions, feel free to reach out to me. Other than that, everyone have a great rest of your weekend, and I'll see you all on Monday. Take care.